It's not going to take much, Elijah. You get out above 1900 and 1920, start making some higher highs, all $2,000 gold, and everybody think, okay, now, and everybody just starts piling in. The chart would suggest we've got a heck of a year coming up too.
This week's specials with Miles Franklin Precious Metal Investments.
2022 Noah's Ark Silver Coins. 1 ounce coins for $3.75 over spot, and 1/4 ounce coins for $2.45 over melt.
Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Always good to see you, Elijah. Merry Christmas.
Merry Christmas to you too. And I know last time we had you on, we were talking about the historically high inflation rate. The highest inflation in 30 years is 6.2%. We just got new numbers out. Now it's 6.8%. Your perspective on what's happening right now?
We went from the highest in 30 years to the highest in 40 years. And it's crazy, and everybody knows, how they measure things with their, what they call hedonic adjustments, that new cars are actually in price in the CPI, for example, new cars are actually considered to be less expensive now than they were 20 years ago because there have been so many, technological upgrades and things like that. Well, wait a second. Come on now. Or you get guys like Paul Krugman, the Nobel laureate, who tries to claim that inflation is good for low income people. In a sense, because it impacts high income people so hard. Now that's completely standing things on its head. Low income people don't have extra cash laying around, to pay for higher groceries, to pay for higher rent, to pay for higher car costs, to pay for higher everything. And so this is a real problem. But, the political class tries to always deflect it off onto something else. They'll try to say, oh, no, this isn't our doing. The fact we've expanded all the, this federal spending to the point where the Fed has to monetize everything and all these dollars are now sloshing around. And, oh, no, don't look at that over here. Look over here instead. It's actually good for you. What? Come on. So, and I'm also worried, Elijah, about geopolitical stuff. I don't know if we discussed this the last time that we talked, but natural gas prices have come down some in the U.S. because of it's been such a mild December, but they're still soaring in Europe. Electricity prices in Europe are just off the charts. People have seen charts of like lumber and iron ore and stuff like that when they're going crazy. And now electricity is off the charts. And so what happens over in Europe? Well, the politicians and the bankers can't take the blame for that. So they start looking around for a boogeyman. Now all of a sudden, oh, look over here. Look what Putin's doing. So that makes me real concerned, obviously, on a larger sense. But this inflation is not going away. Even Powell himself has had to admit that, this transitory stuff is not happening. So now it sets us up for a very interesting 2022, and we'll learn a lot about that and get a feel for that later this week with this next FOMC meeting that concludes on Wednesday.
Now, I was just talking to Gary Wagner from the Gold Forecast, and he was talking about how even if the Fed became very aggressive at trying to curb this inflation, if we look at past history, for example, what we saw like in the 70s and 80s, it took 3 years of very aggressive Fed policy to get inflation under control. So even if the Fed is aggressive, which it doesn't seem like that's really an option at the moment, because the markets would crash. Even if that were the case, that the Fed was going to be aggressive, it's not like inflation is going to go away for at least another few years.
Right. And the Fed used to admit this. I don't know if they do anymore, but they used to admit that any move they made in monetary policy, impacting the Fed funds rate up or down, took at least 6 to 9 months to have any impact at all. All right. So think of that and think of inflation continuing this level even higher through next calendar year. But the Fed's talking about, and the market is assuming a Fed funds rate hike maybe by June. So you got a full year now coming of inflation continuing to soar before anything. I mean, again, what are we talking about here? Moving Fed funds from 3% to 5%? No, we're going from 0 to 25 basis points. Okay. A couple other things come to mind. Gold rallied substantially in the period 2003 through 2007, from about $250 to all the way up to 1,000 really by early 2008. And in that period, the Fed hiked the Fed funds rate 17 consecutive times every quarter for 4+ years. They were hiking the Fed funds rate and gold was soaring. Because at the end of the day, it's about real interest rates. The frustration we've had this year is that real interest rates, where you take like the 10-year note and you subtract the rate of inflation, it's like -5%. But all the computers that trade gold futures are basing it more off of real interest rates off of inflation expectations. Okay. So where the inflation expectations have risen this year, going out 5 years or even longer, nominal rates on the 10-year have gone up about the same amount. And so real interest rates as measured off of that expectations is about the same, maybe even slightly higher than it was at the beginning of the year. And that's all part of what has kept a lid on gold. Tying this all back together to the original question, if we go, the longer we continue with inflation running it the way it is and getting even worse, the more those inflation expectations are going to rise. And then you combine that with, look at the bond market keeps rallying because of this idea that the Fed is actually going to make a policy error and, be hiking too late. Those impacts finally kick in a year from now, just as everything's going into recession. We have a chance to see real interest rates, even versus inflation expectations, take off next year. And if they do, if that's the case, gold will make up for a lot of lost ground real fast.
With respect to really what gold has done this year, it's definitely surprised a lot of us because we'd think amid inflation, we'd be seeing gold rise. What do you think has kept gold down?
It's that transitory word. The Powell and Yellen too convinced everybody, oh, no, it's just transitory. Remember that's been going on all year long. And they finally ran up the white flag, 2 weeks ago? And people are figuring that out now, that it's not transitory. And we got some consumer inflation expectations just this morning as we speak here on the 13th, greater than 6% inflation next year. So it's that expectation that eventually inflation comes back down that is keeping the, projected real interest rate flat. Again, if the 10-year note got all the way up to 1.6% recently, it's back down to 1.4 today. But inflation expectations were just 2.6%. So that measurement is only -1. Well, we got to like -1.2 in August of 2020 when things were going crazy because the 10-year note was only at 50 basis points. So what I'm expecting at some point, because inflation I don't think is going away. This is a function of too many dollars chasing too few goods, whether it's too few goods based off of the supply chain issues or just too many dollars based on all this, Fed and other central bank policy. If inflation continues, then inflation expectations, the longer it goes on, the more you get used to it, kind of frog in a pot kind of stuff. So the longer it goes on, those expectations will rise. But now if the Fed starts hiking rates and everybody starts thinking, oh man, there's a recession coming, people start looking past the rate hike to the next round of rate cuts, the 10-year note stays down below 1.5%. Inflation expectations move up from 2.5 to 3.5, and all of a sudden even that measures at -2. And that could really set off, the machines, the hedge funds, everybody else to start buying gold futures again. And we could, it's not going to take much, Elijah. You get out above 1900 and 1920, start making some higher highs, all $2,000 gold, and everybody think, okay, now, and everybody just starts piling in. The chart would suggest we've got a heck of a year coming up too. So we'll see. It's all going to be keyed off of those inflation expectations. And we'll know a lot more again after the Fed this week and then as we get into January.
What kind of price targets do you see for 2022? And do you see that silver will outperform next year?
Let's start with the first part of your question. I thought this year, again, looking at inflation, I thought for sure, I didn't think it would go this high, but I just thought inflation would start soaring, and it did. And I knew the Fed can't allow higher rates, especially, you go back to January, we didn't even know much about the vaccines at that point. So I thought gold would re-rally from the highs of last summer based off the inflation and the low interest rates. And I thought we'd get to 2,300 this year, surpassed last year by 10%. Right. Oops. Got the macro part right. but the market fooled me, and really about everybody else too. It's not like, I'm the only idiot in the room. So next year, okay. So I just kind of laid that out for you. I think hopefully it has a chance to build on its momentum and then take off. I did a really fascinating bit of technical analysis last week with a guy by the name of Chris Vermeulen, who runs a site called The Technical Traders, and he laid out on the monthly chart. Okay, we're not like just taking the daily chart or something and guessing. Well, we're guessing, but we're using the monthly chart. The monthly chart far more valuable for picking up kind of secular long-term trends. And he had 2 or 3 things that all of them projected out almost precisely to $2,700 gold. I know that seems crazy, right? But hey, look, as recently as March of 2020, gold was around 1450. And then by August of 2020, it was 2100. That's almost a 50% move, right? I mean, that just happened within the last 18 months. So what's 50% from here, from 1800? Well, 2700. Okay, so this is not like the rantings of a lunatic. I mean, we just had this happen in an environment that we might be heading into next year. So that's possible. On silver, yeah, what a fake out. I saw a tweet from David Morgan last week, late last week, and I put it on my site. These guesses, even from all these bank commodity analysts, of silver, 30, 32, 42, maybe as high as 48. I mean, there's like 20 different entries on a spreadsheet of everybody that expected silver to go higher this year. And there are a lot of commodities, whether that's battery metals, base metals, even copper, that had these massive runs, and silver just has had the runs. I mean, it's given everybody the runs. But it too has that kind of similar thing. It's just been held in check. It's been digesting the gains of last year by kind of flagging and going sideways all year. Whatever, it finally breaks out above 28, and then when eventually it gets to where it trades with a 3 handle again, I mean, people are going to. I mean, it'll just be a momentum play. Like Bitcoin is, or some of the, stocks. It'll just kind of take on a life of its own. But for now, it just continues to flag. It's got to break out first. And until it does, we're all just kind of sitting here twiddling our thumbs.
I think that's so key. And a lot of people have been talking about this. If we look at the fundamentals and we also look at the gold silver ratio, it's not like this move is going to happen overnight, but it seems like it's setting up for something pretty big, because right now the gold silver ratio around 80 or so, 80 to 1. I mean, that's really high historically. And if we see a move for gold next year to 2,700, I mean, and silver moves as well. Normally silver moves faster than gold. So we could see quite a big move for silver then.
Yeah. And even in this last drop, we got slightly under 22 last week before bouncing. I still couldn't find, you might find a generic round at 26, 28. Eagles, because they're so hard to come by, because the problem is the mint are still in the 30s, and so there's still considerable demand, obviously, for physical precious metal. It's just the paper stuff that, price ran up a month ago to 25.50 and spent 5 days trying to get above the 200-day moving average. Over the course of those 5 days, the category called swap dealers on the CFTC's Commitment of Traders report, over that 5-day period, the swap deal. And again, what's a swap? Okay, it's a derivative. Well, what's a derivative? Futures, contracts, and options. So these are the banks that deal with futures, contracts, and options. They doubled their net short position over those 5 days, from like net short 10,000 silver contracts to net short 21,000. Price never made it through the 200-day moving average, and then it collapsed. And now they're back down to only 4,000. Okay. So as long as price remains in check, everything's kind of in this uneasy equilibrium between the price that's derived on COMEX versus this physical price that you pay at a dealer. Once it gets moving again, though, and silver is ripe for something like, what you've seen in copper or zinc, or any of the other base metals. Silver's ripe for something like that. But until it begins to break out, till it trades above 28, and that's 20 some odd percent from here, almost 30. And I don't know if that'll happen next year or not. I mean, it's impossible to say. But once it does, then we'll have something. The hard part is, giving yourself the mental duration to hang in there and wait for it to happen, because so many of us, have looked at this year thinking it would go this year and it didn't. So that's what makes it challenging.
Definitely. And as we look also at the stock market, it seems like it could be topping out. Some people are looking for a final melt up. Your perspective on this next year, are you looking for the stock market to top out?
Well, that's what's challenging about that, Elijah. I mean, I'd invite anybody to just go to, like, barchart.com is a site I use for just simple charts. Pull up a chart of the S&P 500 and then lay on there its 50-day moving average, which is a key technical indicator whether you're in an uptrend or downtrend. And you just go back over the course of this year. I mean, that chart's like this. Every once in a while, like once a month, it dips down and taps the 50-day moving average. It just did, a week or two ago. And then it just goes on and makes new highs because there's so much cash. Elijah, what are we still, like 1.4 or $1.5 trillion kind of quarantined every night in that Fed's reverse repo, right? There's just so much cash and there's so much leverage available that with rates so low, there's just so few places to put it. And so the stock market just keeps going up, and it defies logical thought, right? Well, any time in the past, we've seen the stock market pull back. Well, we've been saying that for 6 or 7 years now, and it never does, because this is period that we're in is nothing like any other time in the past. So we'll see. I would be hesitant to expect, some like 40% stock market crash. And even if it did, you would know that the Fed is going to stand and all the other central banks are there just to turn the fire hose on, just like they did in March of 2020, probably bounce right back. It'd be the greatest buying opportunity of all time. So I don't know. I thought the stock market had crashed in 2012, Elijah. So, I mean, I got kind of tired of the old "don't fight the Fed" adage, that seems to still be the case.
Now, again, looking to the end of the year with respect to mining stocks, there might be some opportunities there with tax loss selling. Your perspective on that and where you see the mining stocks moving from there.
But this is something, let's back up even further. Okay. I've been running my site now for 11 or 12 years. And this was a pretty common thing, especially from like 13 through 18. Okay. Stock market is going up. Real estate's going up, everything's doing great. The one sector that just stunk on ice was the mining sector. Okay. So if you've got, let's just say you're in the US, but this holds in Canada as well. Say you've got a bunch of gains, you've been trading, just making fiat like crazy, trading Tesla, or whatever, GameStop. And you get to December and you go, okay, I'm going to have to pay capital gains on all this. Where do I have some losses that I can realize? And then just stay out, because all you got to do then is stay out for a month and you can buy it back. So you find some things that have some losses. Well, from 13 to 18, what had losses? The mining sector. And so there was a pretty predictable pattern beginning in November where the mining shares would really stink and just, every rally would be sold, or maybe they'd open higher because gold was up on a day and then they just go down all day long because everybody was just, again, a lot of tax loss selling. Okay. In that pattern, that would usually wrap up by a lot of times around the 17th, maybe the 20th of the month, because you can technically continue selling all the way to the end of the year, but the trades have, you got to have a settlement date, and, who wants to jack around with that between Christmas and New Year's, right? Let's get there. I'll just be done with this. So this pattern was pretty regular to follow 13 through 18. Well, you didn't see this much in 19 and 20 because the mining sector was actually going up, especially last year. You had gains in the mining shares. So we didn't really see much tax loss selling last year. Some, but not much. Well, now this year, the GDX has gone from, I don't even know where it began the year, 40, and now it's 30. So there's all kinds of potential. And you can see it every day. And you can see it even as we speak. We open higher today, and then, all the shares all just go down. Well, that's going to end. Again, I expect the pattern to be a lot like, what we saw pretty consistently 13 to 18. It'll end by, what's this, Friday the 17th this week, or maybe next Monday. But it'll end before Christmas. And then sometimes you get these massive, like 10% rallies between Christmas and New Year's. because everybody's hey, it's going to be a better year next year. And they go parading in because the stock seems so cheap. So I just, if I could share any, earned with pain and sweat experience, that might be something for people to kind of make a mental note that before Christmas, maybe take a look at some of the mining shares that have been beaten down, because there might be some bargains to be had.
Well, Craig Hemke, we really appreciate your time today and all your insights. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Right there. TF Metals Report. I mean, this is all stuff we talk about on a daily basis. It's an affordable subscription. It's got a global membership. Everybody helps out, rows the boat in the same direction. If you're going to follow gold, you got to follow lots of stuff like we started talking about, like the geopolitical stuff. I mean, everything impacts gold. So it's a good one-stop shop for daily news and information. I do a post every morning and a podcast every afternoon just to keep everybody abreast of, so you can live your life. Let me worry about all this stuff. So anyway, tfmetalsreport.com. Love to have anybody who wants to come join us.
All right. Thank you so much, Craig, and God bless.
God bless you, Elijah. I hope you and your family have a Merry Christmas, safe holiday season, and we'll get together in January and see where we are.
Definitely. Same to you, Craig.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.